Okay, Nikunj is saying if the speed of going up is more and while during pullback that is less or takes more time, can we concur that selling is weak and it is just a pullback? Now see, it can be like that and it cannot be like that. You have to understand, these are all patterns. Okay, these are all the ways markets have traders have sort of come up with these ideas. Now you just answer these questions for me. This is the chart I'm looking at. I have drawn these two lines, 1 and 2. Which one is steeper? First is steeper. So what you're telling me is that this is taking less time, this is taking more time. Both are going down. So sellers here are strong and this probably is weak. Then what happens? This is a sharp fall. So now with this logic, you might say that, okay, sellers were strong, but now they are weak. Market should go higher. What happens? Market will kill anyone who bought in this zone. Why? Because it does not work like that. Okay, it does not work like that. I know where that idea comes from. It comes from the idea of flags, right? So fast move, shallow consolidation, continuation. Does not work like that. Not always. Okay. Yes, there is some merit to the argument, but it is not always true. Please understand. Okay. Now again here I'll try to show it to you. You can see, the rate of movement to the upside is very low, weak. Here also it is weak, logically followed by sharp falls. Here also it is weak. Then why have we gapped up and why are we trying to go higher? So it does not work always like that. There is a difference between a price pattern and a trader behavior. All right. So when I show you an example, try to understand always what trader behavior I am highlighting. And price patterns, they are dime a dozen. It does not help. You will always be fooled by it. Don't focus on price patterns, focus on trader behavior. Right.